Welcome to Trading Lounge and the European indices, and starting with the AEX, the Netherlands here, because it's got a very nice example of actually what's going on across most markets actually. So from wave 1 up here, we're looking down for wave A here, and this consolidation here going sideways here best fits a triangle pattern. So that would be 5 waves labelled an A and a B and a C and a D and an E wave, then down for 1, back for 2, 3, 4, 5 to finish wave C here. Wave C and wave A can have the same length, so some markets will move further than others, so you'll need to look at that a bit closely depending on the market that you're looking at. The other good news here too is that if this is a triangle pattern here, if that's the case, then triangles occur in wave 4 and also in wave B. So if this is wave B here, then it does confirm that this whole move down here is actually an A and a B and a C wave here, rather than down for 1 and back for 2 and so on here. So yeah, that little pattern in here, each leg within the triangle is in 3 waves. So that's what we actually have here so far. So we can expect wave E to move up 61.8% of wave C from D here, so pretty much in that consolidation sort of area here before sort of rolling over. Once again, the short trade setup here would be the 430 becoming the retested resistance. It's tried a few times, but hasn't dropped below the first test lower each time. So you do have a reference point now, but you still need to wait for reference point 1 to come into play here as well. Alrighty, moving on to the stock 50 here. So this can be the same triangle pattern here, even though I've got it, this is how I had it labeled before. So it can be an A wave, a B wave, an A and a B and a C here for the D wave, then the E, where are we? A, B, C, D here, and then E back up here, and then down again. So not really a big difference, but an E wave moving back up here in 3 waves, probably, you know, will play with the trend line there, I'd imagine, and then move down for 1 and back for 2 and 3 and 4 and 5, that sort of thing here. So that's what we're looking at the moment. So not a big, not such a big deal, but let's just copy that text there and put that over here, and I'm just going to save that so it reminds us later what we've talked about somewhat. But yeah, look, looking quite sort of good here really in a triangle pattern as well. So just that one more sort of flick there, and then down from that point there. And of course the DAX will be much the same as well. So on the daily chart here, you know, still looking for a move down into 9.5 basically, and you know, wave A here and wave C should have some sort of equality to some point there. So we just really need that to play out. We can see that the market has found the 10,000 as the resistance, so that naturally makes us look for short trades and not long trades. You know, and short, yes, it could pop up on top of the 10,000 and would have a losing trade, but then we would be looking to go long from that point. You know, we have to take all the logical steps, and then that way you can't get emotionally sort of upset with yourself. So drilling in here, I can't recall what chart I've been working on, but 2 hours good enough. So this is how we've had it as well, originally as an A and a B and a C wave here, but the C wave here really is in 3 waves, isn't it? You know, like an A and a B and 1 and 2 and 3 and 4 and 5 here. So yeah, I was concerned about that. I just didn't have the right look and feel about it. So we need to look at this in terms of an A wave, a B wave, a C wave here, probably a D wave here, and then the E wave here, which, you know, can come up to this sort of area here, 61.8% of that and that here. So it can, you know, come up a bit higher here before moving lower through here. So if you're short already, that's fine, but if you're looking for a short trade, then really we need to drill into the E wave here, or have the 9.8 as a retested resistance, and that would be the safer trade at that point there. So just on the 15-minute chart here, we have been sort of working trades on this side of the fence here. So one was looking for a position up here, one was the breaking of the trend line. We were talking yesterday, I think, perhaps about, any move down through the 8 here would go back and retest it. But the first move down here, not to chase it, that's not good. You can get away with it, but if you have a strong set of rules and you just play them out, then, it kind of starts to remove the coulda, woulda, shoulda sort of thing, but that's the reference point there. Now, we could bring this, oopsie-daisy, we could just bring this reference point to here next, okay, so you can get a cleaner, a closer point to the market. So what we're looking for here with this other structure here, let me just tune into where we are. Yeah, I don't know. We'll just have to see where the E wave goes, but it's not going to go that far. We've got that. Let's just figure this out a little bit. So it could come back up to this sort of area here. So that's what you'd need to accommodate in terms of a move. But looking at this and seeing what's going on, I'd be sort of more inclined to bring it into this space here. But we'll pick it up on the London opening, and I know that's a bit messy, sorry about that. I'll try to make things and keep things as simple as I can. Things are tricky enough normally, but they're the possibilities. So really leaving a stop still well out of the way is what we're basically looking at here, but looking for short opportunity so we can remove this one here, and I'll just save that. So look, that's it in a nutshell. Just pretty much, if we haven't picked up the E wave in the London opening here and haven't nailed it properly, whatever happens, don't miss the breach of these lows here. That's the important thing here. And also too, you'll need to accommodate a move back up into this space here. This is probably the wave E here, so it's probably the A wave and the B wave and the C wave into here, or even into this space here, and then down from that point. So I need to study it a bit further, but taking that break there is the go, and leaving stops out of the way up here. All right, cheers.